Look at the companies dominating the top of the 2026 Crunchbase Unicorn Board. You have entities launching reusable orbital rockets and organizations building the underlying systems of artificial intelligence. These are massive, hardware-intensive operations, holding hundreds of billions in private market value. Right alongside them sits a company that started out by serving 15-second clips. Bytedance, the parent company behind TikTok, doesn't build rockets, yet it commands a spot at the very top of this elite list. In early 2026, shares trading on the secondary market pushed Bytedance's implied valuation to $550 billion. That represents a $70 billion increase in under 3 months. When an early investor like private equity powerhouse General Atlantic moves to offload its massive equity stake at those heights, markets often interpret it as a red flag. The instinct is to assume the smart money is fleeing before a collapse. A closer look at the fund's timeline reveals a different reality. Venture funds operate on strict, legally binding holding windows. General Atlantic invested back in 2017 when Bytedance was valued at $20 billion. They simply reached the end of their 10-year holding period, locking in a massive return. The institutional demand to buy those available shares is fueled by hard cash flow. Recent projections show Bytedance generating roughly $48 billion in annual profit for 2025. That puts their total annual sales quietly above Meta, the longtime king of digital advertising. A private Chinese startup managed to outmaneuver Silicon Valley's most entrenched monopoly and become the most valuable private technology company on Earth. To see how they did it, we have to look at how they deliver content to your phone. For a decade, Meta built its empire on the social graph. This is the premise that people want content based on who they explicitly choose to follow: friends, family, and celebrities. The algorithm's job is to route posts along these distinct, user-defined connections. The structural constraint here is volume. A user's feed is bounded by the creation habits of their specific social circle. If your friends aren't producing highly engaging videos on a given day, the quality of your feed drops and the time you spend on the app decreases. Bytedance discarded this model. They operated on the insight that audiences rarely care about the identity of the creator. They only care if the video holds their attention. They call this the interest graph. By deploying highly sophisticated predictive AI, TikTok evaluates behavioral data: how long you hover on a frame, what you skip, what you rewatch, to serve what you want to see next. It completely separates the value of a piece of content from the social status of the person who made it. This chart shows the result. Because the AI scans the entire global pool of videos to find a match for your specific niche interests, it generates significantly higher time-on-platform metrics and faster monetization than a feed limited to your high school classmates. Meta had billions of users locked into a network. Bytedance proved that if your recommendation engine is smart enough, you can bypass that established user base and break the network effect entirely. Even with superior technology, Bytedance carried a heavy valuation discount for nearly 5 years. The company operated under the very real threat of forced divestiture or an outright ban from the United States government, forcing investors to price in the risk that TikTok could be legislated out of existence. That changed in January 2026. The U.S. government formally approved a restructuring agreement, moving TikTok's American operations into a new, majority U.S.-owned joint venture. Resolving that standoff removed the single largest geopolitical overhang on the company's valuation. With the existential threat neutralized, institutional capital flooded the secondary market, driving the implied price tag to $500 billion. And that capital is backing a diversified monetization engine. Bytedance has extended the power of the interest graph well beyond digital advertising, integrating TikTok Shop directly into the feed to capture users from discovery straight through to a direct purchase. Domestically, the parent company is extracting massive cash flow from its Chinese short video platform Douyin, its news aggregator Taotao, and its leading consumer AI assistant Doubao. When private equity firms buy shares at a $550 billion valuation, they are pricing in a de-risked global infrastructure asset spanning targeted ads, commerce, and AI services. A valuation of this size creates acute pressure for liquidity. With secondary markets showing insatiable demand, the stars are aligning for a Bytedance initial public offering in 2026 or 2027. However, avoiding Wall Street has clear advantages. Operating outside the public markets gives Bytedance the strategic flexibility to move at aggressive speeds, without the burden of managing quarterly earnings calls or opening their financial books to competitors. Whether they ring the opening bell this year or stay private, the scale of this company's success signals that the traditional era of the social network is effectively over. The future of consumer tech belongs to the algorithm-driven internet. The platforms that dominate will be AI-first systems, capable of interpreting behavioral data to figure out precisely what you want to watch. Bytedance's ascent proves a cold, highly profitable truth. Predicting what a user wants to see is vastly more profitable than showing them who they know.